Hi everyone, welcome back to the Web3 Daily Recap. So today's market vibe is kinda just meh. Bitcoin dipped slightly, hovering around 113k. Not a dramatic move, less than 1%. Ethereum dropped a bit more, over 2%, now under 3.6k. XRP, down about 4%, but it's still doing that sideways dance. And the popular tokens SOL, ton. They're just tagging along with the mood. Nothing too wild. What's spooking people? It's this new stagflation worry after that weak US services PMI data. Investors are reading between the lines, prices are high, job growth slowing, demand's shaky. It's the worst kind of macro mix. So, naturally, both BTC and the Nasdaq took a hit. But not a panic sell, more like a cautious step back. It feels like the big money hasn't exited the room. They're just leaning against the wall, watching, waiting. It's halftime energy. We're just one move away from the next push, maybe a macro shock, maybe some protocol drama. For now, sit tight. Don't get shaken out. The next act is loading. So here's the deal. China's Ministry of State Security dropped a public warning recently, and the message was loud and clear. There's a foreign company using crypto as bait to collect iris scans from Chinese citizens, and it might threaten national security. They didn't name names, but let's be real. It's Worldcoin, that eyeball scanning, token dropping project backed by Sam Altman. And now it's officially being seen not just as a privacy risk, but as a national security concern in China. The thing that hit me the hardest, it's not just about data storage or consent anymore. Once a government labels your protocol a security risk, you're no longer just dodging financial regulators. You're up against the entire state apparatus, and this isn't a fringe view. Europe's been probing Worldcoin. Kenya banned them temporarily, and now China's calling it a red flag. Yeah, WLD dipped a bit on the news, but the real damage, it's existential. You can't scale a global ID system if half the world is locking their doors to you. This might be the first serious inflection point where a Web3 project gets boxed out, not for failing financially, but for being too politically risky. Let's talk about what might be the most revealing signal in the market right now. Money's quietly rotating. Bitcoin ETFs in the US just posted their fourth straight day of outflows. That's over 1.2 billion put in less than a week. And it's not small fish, it's Fidelity, BlackRock, the big boys. They're not panicking, they're repositioning. Why? Because macro's throwing curveballs. The US services PMI came in weak, signaling a stagflation scare. That's high prices, slow growth, bad vibes for risk-on assets like BTC and tech stocks. So what we're seeing is a cool-off phase. Big money saying, let's wait this out a bit. But here's a twist. While Bitcoin ETFs bleed, Ethereum ETFs are suddenly up over 70 million in net inflows. That's not random. That's rotation. Why ETH? Well, the SEC just gave a subtle but important green light saying staking rewards don't necessarily count as securities. For institutions, that's all they needed. The path for a spot Ethereum ETF just got clearer, so they're dipping their toes in. BTC still the macro hedge long term, no question. But in this moment, ETH looks like the more regulatory comfortable play. What this tells me is simple. Retail might trade based on price action, but institutional money trades on signals. And right now, the signal says ETH might be about to have its moment. Now let's talk about the Roman Storm verdict. It's not just a legal case, it's a message. Storm, the dev behind Tornado Cash, was found guilty, not of money laundering, not of sanctions violations, but of operating an unlicensed money transmission business. Basically, he didn't have a license, and the jury said, that's enough. This isn't a full conviction, it's a symbolic shot across the bow. The government is telling every privacy protocol dev out there, you might not be running the show, but if you build the rails and bad actors use it, we might still come knocking. The prosecution claimed Storm knowingly let North Korean hackers launder over $1 billion through his code. He said, I just wrote the code. It's open source. I didn't profit. I didn't control it. But the court didn't care about that nuance. They saw involvement. They ruled involvement. 5 years max. And remember, this comes after the Treasury quietly removed the sanctions on the Tornado smart contract addresses. You feel that? That's the carrot and the stick, both in play. So what's the real signal here? It's that open source devs are on thin ice, not because they're criminals, but because governments are done tolerating what they don't understand. Storm's trial wasn't about him. It was about setting precedent, and the precedent is clear. If your tool helps bad actors, even accidentally, you might be next. Let's break down what happened with Coinbase's Base chain, because this wasn't just a tech hiccup, it was a wake-up call. Base froze for 33 minutes, just stopped producing blocks. The culprit, a misfire in their conductor component, which is supposed to handle automatic failover between sequencer nodes. What happened was traffic spiked. The main sequencer got overwhelmed. Conductor tried to hand off to a backup, but that backup wasn't fully synced. Boom, no one's home. Blocks stopped flowing. To me, this wasn't about downtime. It was about fragility. Base is Coinbase's baby. It's meant to be the poster child for secure, scalable, compliant layer 2s. But this exposed just how centralized its backbone is. When the sequencer goes down, everything stops. The Base team responded fast. Sure, 5 minutes to initiate emergency mode. Manual override within the hour. But for 33 minutes, DeFi on Base was frozen. No bridging, no flash loans, no Oracle updates. Just stillness. This is the real concern. So many so-called decentralized chains are just fancy wrappers around centralized sequencers. One node goes down, the illusion breaks. Base says they'll fix it better, failover checks, more redundancy, but the lesson is bigger. Every high-performance L2 is dancing on this same line between speed and fragility. And now we've seen what happens when that dance goes wrong. This next one's low-key big. KakaoBank, the largest digital bank in Korea, just said they're actively exploring issuing and managing a Korean won-pegged stablecoin. That's a huge shift. Korea's central bank recently scrapped its own CBDC pilot and signaled it's open to letting private firms explore stablecoins instead. Now KakaoBank is stepping up. They're not doing this in isolation. They've formed a cross-company task force within the Kakao Group, holding weekly strategy meetings. This isn't a moonshot, it's a coordinated rollout. KakaoBank already has partnerships with crypto exchanges, real name verification systems, and solid KYC, AML infra. They've even worked with the central bank before on previous digital yuan tests, so they're not building from scratch, they're just finally being given the green light. What really jumped out to me? Retail appetite. Circle stock. After its US listing became one of the most bought foreign equities among Korean retail traders. That tells you people want exposure to stablecoins. They believe in the product. Korea might just become the first Asian country to deploy a functional, compliant, fiat-backed stablecoin system, not through government fiat, but through private innovation under regulatory blessing. If they pull it off, this becomes a blueprint. Hong Kong, Japan, even Taiwan will be watching. And that's a wrap on today's Web3 recap. Markets, sideways, cautious, watching. Capital's moving but not running. Bitcoin's holding ground. Ethereum's gaining quiet confidence. News, regulatory signals everywhere, but none of them final. Just enough pressure to say we're watching. China's taking aim at Worldcoin. The US put tornado devs on trial. Institutions are rotating. Banks are building chains. This is not a bear market. It's the construction phase, and only the quiet ones are truly preparing.
If you're still here, you're probably not just hoping for pumps. You're building thesis, watching signs, and waiting for someone to blink first.
Stay sharp. Talk soon.